Thank you, Mr. Strobel. The last question.
It's my pleasure to introduce Mr. Robert Kulp. He's the founder of Kulp's in Stratford, Wisconsin. His firm is a roofing and insulation company that has been in business since 1985 and employs over 40 people. Mr. Kulp is testifying on behalf of the National Roofing Contractors of America with over 4,000 members worldwide. Welcome.
Thank you. Chairman Graves, Ranking Member Velasquez, and members of the committee, thank you for the opportunity to testify today. I am Bob Kulp, with a co-owner of Kulp's of Stratford. We're a small roofing and insulation company doing residential and commercial roofing. We've also moved into installing building integrated solar photovoltaic roofing. We employ between 30 and 50 people, and we do about $6 million in annual volume. I am testifying today on behalf of the National Roofing Contractors Association, and I serve as a director as well as chairman of the Government Relations Committee. Established in 1886, the NRCA is one of the nation's oldest trade associations and a voice of professional roofing contractors worldwide. As the national unemployment situation continues to slowly improve, unemployment in the construction industry remains at an alarming 20%. Clearly, it's time to take steps to improve this situation. Reducing complexity in the tax code is a good place to start. NRCA urges Congress to take immediate action to simplify taxes in order to help spur job growth within the construction industry. First, Congress should facilitate the creation of an estimated 40,000 jobs by reforming tax depreciation for commercial roofs. Depreciation reform would also enhance the energy efficiency of our nation's commercial buildings and simplify taxes for many small businesses. Depreciation reform is necessary because between 1981 and 1993, the depreciation schedule for commercial roofs was increased from 15 to 39 years. However, the current 39-year depreciation schedule isn't a realistic measure of how long commercial roofs last, which is about 17 years. The large disparity between that 39-year depreciation schedule and the 17-year average lifespan of a commercial roof is an incentive for building owners to delay the replacement of failing roofs. This slows economic activity in our industry because many building owners choose to just do piecemeal repairs rather than replacing a failing roof in its entirety. Several bills have been introduced in recent years to rectify this situation by reducing the depreciation schedule to a more realistic 20 years. This would facilitate the creation of an estimated 40,000 jobs in the roofing industry and add $1 billion to the taxable annual revenue to the economy. Depreciation reform also would provide savings to small businesses of all types by simplifying their taxes and lowering energy costs. NRCA welcomes the opportunity to work with members of the committee on legislation to create jobs by simplifying taxes through depreciation reform. Second, the NRCA calls for the immediate repeal of the 3% withholding on government contracts. Repeal of this law, which adds a new layer of complexity to a contractor's tax filing, is vital to job creation and economic growth in our industry. If the withholding law is not repealed, many roofing contractors will face serious repercussions. Cash flow and operating capital disruptions will be a tremendous burden, particularly for small businesses. The bookkeeping systems of many small businesses simply aren't set up to account for those large amounts that are withheld from invoices, and withholding will complicate tax filings. Additionally, many roofing contractors will be simply forced to stop bidding government contracts in order to avoid those costly tax complexities. NRCA strongly urges Congress to quickly repeal this law that further complicates tax filings due to the 2012 implementation date that's fast approaching. Third, NRCA supports legislation to reduce tax complexity by reforming how construction contractors can utilize the completed contract method of accounting. Under current law, contractors cannot use the completed contract method if the annual average gross receipts exceed $10 million, a threshold that's not been adjusted for inflation since 1986. Contractors who cannot utilize the completed contract method must use a percentage of completion accounting method, which often doesn't accurately reflect results due to the required use of cost estimates. This is a major paperwork burden for many small and mid-sized contractors because of the need to estimate the percentage of a completed project and then retroactively amend those filings in subsequent years based on the actual numbers. This is another example of the complexity in the tax code that is an impediment to business growth and job creation, and increasingly more time and resources must be devoted to tax compliance rather than more productive forms of economic activity. To include, NRCA urges Congress to address the alarming 20% unemployment rate in the construction industry by reducing tax complexity for contractors in our industry. Thank you for your consideration of the NRCA's views and the opportunity to testify today.